Alrighty, what's up, everybody? I got a quick, short video to talk about specifically how the market lens, where AM trades, T trades, Kiko, and GXT, Garrett are in. This is my current group. Well, my main group, obviously. My main group, actually. Uh, I want to talk about how they read liquidity, specifically AM, 'cause that's the guy that I follow the most in the lens. So his main key levels to trade away from are daily highs and lows, relevant swing points, and extreme highs and lows of ranges. He never trades away from further swings, as that is an automatic low probability trade. Trading into Fellerson is the most ideal. The reason I love the protected swing concept is because it makes me feel more assured of the run on liquidity based on me testing it and looking into past datas and seeing how it it reacts from it. Um, it reacts very fast and directional. Uh, Things that I look for in these areas are displacement, strong candle close through the candle that makes the CSD. I want it to be closed through very strongly, like a very strong big candle, like with minimum wick. The B shape. This is a Garrett GXC guy concept, or at least he likes to describe it that way. The B shape of structure, the fast close through, or the fast close through if the manipulation doesn't happen. Trading away from filler swing becomes low prob. Trading away from filler swing becomes low probability because it can be generating liquidity to potentially be hunted. It can be a range day with no expansion, or the setup isn't ready yet to be traded. Trading into those failures saying is ideal because price action move effortless when trading away from the protected swing, especially when it is the right time. For example, if you trade the indices during 8:30, you want to see either price go away from the protected swing or create one, or 9:30. I got a few examples here. This one specifically, it's about protected swings. So this looks very familiar. It's the MMX. I don't know, from original consolidation or sell side, I think, and buy side. I think that's how he calls it. But when you're trading into the buy side from the sell side, you want to trade away from relevant swing points. And those are swing points like this, when it creates a strong manipulation back into the range. This one is not a failure swing because it's a S&T with ES, and the day closes back inside the range. The next few days, to get to this point here, it generates liquidity, and then at a specific time, like this time, 10 a.m., it hunts the liquidity and then it trades away from it. Here, again, generating liquidity. There's no relevant swing point here that you can trade away from. You can say this one is, but look at the reaction. Nothing. Then this one becomes the extreme low of the range, which you want to see a reaction from. And we get it right here. the fast manipulation back inside the range. New York opens, manipulation already happened, so therefore you want to see New York trade away from it. So they specifically don't trade from failure swings, meaning swing formation that are like this, anything that is in close proximity to the next swing point, they don't consider it to be reliable plays to expect a reversal from. This is a relevant low because it's far away from the next one, which is right here. This one is not because it's very close in proximity to the next low. So when that happens, if you expecting a reversal here or you get a reversal here, you can most likely be stopped out because you didn't trade away from a significant swing point. Because when this one created the fake reversal, it only created failure swing that can be targeted even before it targets the failure swing on the opposite side. So you want to trade away from protect the swing to low liquidity, which is what I have here. Low liquidity, protect the swing. Low liquidity, protect the swing. So that is protect the swing points. Here they have the daily high, daily lows. Like this specifically, these are the main ones that I look for. If you're trading higher, if the drawn liquidity is higher, then you wanna look for framework that are indicating high price action, high structure towards the outside. This one is one of them. When let's say this is a Monday or Tuesday, but I'm aiming higher, then I want the next day to give me a framework where it opens low, high, close. So I want to target or I want to trade away from the low of this bearish candle. I want to trade away from it. Or if it doesn't hit the low, then I want either ES or YM to hit it so I can trade away from it. Because S&T means protect the swing. This is another one. I just don't want to trade away from it because the daily candle closed very close to the low of the candle. So this can be like a little range in the 1 hour, depending on how if the daily opens here and then it trades above it and then it creates a breakout, then yeah, I can trade away from it using the breakout for basically support, or I can expect it to open low, high, close. This is another one. This is a mini range of 3 candles. When this candle opens, I just don't want to trade away from this swing points that are failure swings right here, down to the downside. If I'm bearish, I want it to target both of them, both of the highs. So price doesn't have a reason, if it's bearish, doesn't have a reason to come back up here. So it can just create a reversal and then just trade away from it. Here, some from recent price action. This is a great example. This one created a failure swings right here. This one, this low right here, it's a relevant swing because it's far away from the next or the closest swing point in price. So when Wednesday came down into it, manipulated it, and traded higher, you could have traded away from it from this low because it's far away from this low. Here also, again, if you're bearish, if you're bullish, any bearish candle, you want it to come to, or any bearish movement, you want to see it go to a relevant swing, like Thursday's low. It's very far away from Wednesday's low. Therefore, you want Wednesday to either give you a reversal, Friday to give you a reversal, so Monday can follow through like it did here. Obviously, this is news, but it made the point. Here, again, this is the most relevant swing point close to this candle. This one was one, but it didn't give a reaction. The framework was bearish on this day, therefore you want to trade into it or away from it, depending on how this candle closes. If it closes like this, like it did here, that's a rejection. You can expect this candle to give you a framework where it opens low, not too deep, so it can create another failure swing, but give you a decent size movement lower, so it can create the reversal for the day, so you can trade it higher. Another one, this one, far away from this one. This one is a S&T with ES, therefore it's a relevant swing. Can trade away from it. This one, reversal. You can next day you can trade away from it because it's a S&T with YM. Daily low, rejection. Daily low is one that I like. The price action coming from this low is higher. Now the reaction was higher based on this day. On Monday, Tuesday gave a retracement. It didn't go deep enough to make these failure swings, but how this candle opened, that it didn't give a very long movement down and it just turned around right away, that makes it relevant, and you can trade away from it as well. That is daily highs and lows. The other one that I have are extreme ends of ranges. This is when you look for range on the big candles and price just starts trading inside of it with no direction. You either want one of either the high or the low to be traded into, and then from there you can expect a reaction, either a big close through so you can continue lower, or either a rejection, and from that rejection you can expect to trade it higher depending on the framework you get the next day. This another little range right here, there was no follow through higher, therefore you want one of the days to manipulate the lowest point in this range or in these failure swings, which is this Friday. Here comes Wednesday, traded into it, and it trades higher. Here's another one. Initially it worked, but then Wednesday came and gave a strong close through, so you can expect Thursday to continue lower and Friday also. A range can be as little as 3 candles if you have a decent sized candle, and then the next day is just a candle inside of it, so it didn't either go to the lows or the high of the day, and it just stayed inside. As a range, you can expect next day, if you're bullish, to come manipulate the low or it can just give a strong close through this candle without having to manipulate these, and then you can just trade away from it. And that's all I got.